All right, recording started. So basically, what we want to do with this. So basically everything we do, we're gonna go through the this, right? So let's just run through the pre-market plan. So the pre-market
Okay.
plan, I think today I posted uh here we go. So what we're looking for really specifically was okay, let's just go here. So the four pillars, right? When it came to the four-step process, what we were referring to is, of course, the four-step positioning process. The step is the acronym, so it's actually the four-step positioning process. And what I want you to do is I want you to remind me of what the four pillars were. I think we discussed it as the four pillars, but what were the four pillars? Because this is like the foundation to
Yep.
understanding to understanding levels and entries and all this stuff. So what does the step stand for? This acronym here,
Yep. So the first one is market structure.
or just structure? Yeah.
Yep.
Yep.
Uh, the the T is escaping me.
Okay.
So we
You,
do
you can describe it. Just describe what it is.
yeah. So it's the highs and lows. So that's the structure. Um, the E is equilibrium. So that is the pivot. The Fibonacci. So
Yeah.
the 50. The and then the P. Oh my gosh. So
It's
you had
okay.
me
Don't
go
worry.
through, that's okay. You had me go through market structure. You had me go through the 50%. We looked at breaks of structure. Um, we looked at the whether or not we are in, so position, I think P is position. So whether or not we are in discount or premium, that may also be equilibrium.
Yeah.
Um, we look at where we are in compared to the Asian market.
Yeah.
Um, I'm still not remembering what the T is off the
Right. So,
top of my head.
so can you see
Yeah,
this?
targeted liquidity, so that's highs and lows.
Yep.
The recent high and low,
Yep.
equilibrium, and then okay, and then the P price and balance. So the fair
For
value
fair
gaps.
value. Yep. Yep. So yeah.
There we
Perfect.
go. Okay.
Perfect. 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 That's it. So the reason I'm making it into these acronyms is so you can actually understand it. So
Yep.
basically, the four-step positioning process allows you to basically go through structure. So I'll quickly go through it with you. So high, low, high. So when you're approaching the charts, you should almost zoom out a little bit. Now people say, how long should I zoom back? What time frame should I zoom back? I haven't got a crystal ball answer for that, right? You need to zoom out as as much as you can so you can see that, so you can apply the four-step positioning process with accuracy, right? Now, once you've done that, once you've gone through the four-step positioning process, the reason I'm starting with this is because let me just do this. So once we've gone through structure, like you correctly said, then we look at targeted liquidity. Targeted liquidity is basically the most recent low and the most recent high. Can you see that?
Yep. Uh-huh.
Now, once you've done that, you go through equilibrium, which you also correctly said, which was anything above the 50% is a premium, anything below is a discount. Let me just
Discount. Yep.
there you go. So premium and discount. And then the last thing is price imbalances, right? So once you do price imbalances, this gives you your key levels. So I get a lot of questions about key levels, and I want every single student to leave my sessions knowing how I find key levels because I get this question a lot. So I'm going to be going through this.
Yep.
Now, the thing is, the what you want to understand and what you want to build into your brain is this circle here. So I've sent you this on Discord. I will be transferring everything over to school, but for the sake of, if you look at this image here, right, what you're seeing is the premium footprint execution process. So the premium footprint execution process, the way you want to approach your charts right from pre-market plan. So for you, that's going to be, I think, 7 a.m. Mountain Standard Time, all the way to when you enter a trade, right? So positioning comes from applying the four-step positioning process. So
Yep.
this is how I found my key levels. So, if obviously I'm assuming you're following along in the school,
Oh yeah.
what we saw here was a 15-minute price imbalance, right? Right here, 15-minute. This is a 15-minute price imbalance. What I mean by that is the reason I've called it a price imbalance is just so I can make it fit into the acronym, just to make it like an acronym. But it is a fair value gap. like you said, 15-minute time frame, right? Now, does that make sense?
Yeah, and I'm able to find my own now pretty well. There was one comment that you made a couple of days ago, or maybe last week, where you find more value in trusting the key levels that come out of the London session.
Yeah.
You
So
remember saying that?
okay, yeah, I did. So it doesn't have to be from the London session, but
Yeah.
ones that come from the London session typically follow through in New York very well, if that makes sense. So
Okay.
here's an example. I'll show you an example of that actually. So if you look here, this was a London Fair Value Gap. It happened at in 9:30 London time, so that would be like 4 a.m. New York time. This was
Yep.
actually a fair value gap that held pretty well. So I didn't take a trade from it. It was way too choppy here on Monday. But if you just take a look at this, this level here held so beautifully here,
Yeah.
right? That is the accuracy of choosing the right fair value gap. And how do you choose the
Right.
right fair value gap? Well, it comes down to two things. First of all, it comes down to absorption. Uh, Actually, no, sorry, it's only one thing. Sorry, it comes down to absorption. I'm so used to saying
Yeah.
two things because that's how key levels, right? Key levels typically come from these two things. People think I overcomplicate it, but a 15-minute fair value gap that has an absorption does become a key level, and you will see that. I'm going to give you some I'm going to give you some detailed homework. You can go and like see this for yourself. But when you're
Sure.
looking at this, what you want to understand is it's not an accident that even this London session we stalled here, even here we couldn't close above here. The rejection was here. So
Right.
what I'm even here as well in London as well. So what I'm trying to tell you is that once you have established a strong area of demand and supply, that shows you where the market is actually reacting from. Because I've not made this level up. I've not made this level up. People think I made the
Sure.
levels up. I've not made it up. So what I've done is I've identified a 15-minute fair value gap that's in the premium. Don't forget, I avoid trading this kind of chop near the equilibrium. I never ever, never ever make the mistake of trying to trade at the equilibrium. It's the worst thing you can do, right? You're just going to sit and
Yep.
chop, right? You're just going to sit and chop. It's not good. So
Yep.
what you want to do is you want to get you a 15-minute fair value gap like this. And once you've done that, you want to really study what's going on in here. Now, how do you study what's going on in there? Good question. So, oh, not that. So, what you want to do is you want to read the price.
Yep.
Now, now, how do you read the price specifically? So, inside of here, how do you read the price? The way you read the price is by using our friend here. So, we use the
Mhm.
real time reading blueprint. So, I actually made a post on this on the school. I'm gonna go back and try and find it. Uh, Thank you so much for the video, by the way. I really appreciate that. Um,
Yeah.
let me find it because there was definitely a post I made. I want to see. So I want to say on Monday the 27th I made the post. So give me. I'm
And
literally
so
gonna.
I've read all the posts.
No, but
Um,
it'll be a lot easier if I just
okay.
quickly. So it'll be because I want to explain it while I'm doing it. So
Sure.
2 days ago, 1 day ago, 1 day ago, 2 days ago. So 4 days. Pre-market plan. Okay, so let's see. I think it was here. Yeah. So oh, I'm really gonna find this. Okay, so forget that. So basically, what I saw here was essentially I was reading the price action here where I've circled, and what was going on is I was reading the order flow. So the word read is super important because what does the read stand for? What does this acronym stand for?
Well, so I believe the R is actually to read the. Well, okay.
Read the what?
Yeah. So the ask and the bid.
Yeah, yeah. Read the I tried to say bid and ask. Yeah, so read the bid and ask. Yep.
Yep. Bid and ask. Find out who is being. No, that's trapped. You know what? I'm gonna have to look at your chart. Because I haven't memorized your read. So in the positioning, it's so. Let me ask you this: one of these, are you? So once you get the key levels, is one of these from the trade view chart, and then the second P or the third P is from the order flow chart?
So when it comes to reading the footprint chart, so when it comes to specifically reading price action here, this is a
Yeah.
skill we develop on the footprint chart. So whenever someone says, "How do I use the footprint charts?" or "Where do," so 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 so
Okay.
the where in terms of key levels we answer here. Right now we're moving on to price, which is when price comes into your key level, right? How do you actually
Yep.
read the price? Because I see a lot of traders they get stuck on engulfing candles, pin bars, all this weird stuff.
Yeah,
What
I don't do any of that.
fantastic,
So it
fantastic.
is, yeah. So I'm learning how to get rid of all of the confirmation and all of the patterns. It really does not help. It doesn't matter at all. So it
Absolutely.
is evaluating the so reading the ask and bid, and I don't even do so today's my four. I didn't even use trade view at all. The only reason I
Yeah,
use trade
yeah,
from here
yeah,
on out is to look at the timer for when the candle is going to close. I can't
absolutely.
find an indicator in ATAS on the close candle count. So
Yeah.
today was all order flow. I didn't even use fair view at all.
Trading view.
Um,
Yep, 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 yep.
yes, and I don't really plan on needing it other than looking at the. Okay, so the first P, finding the key levels, I use that there. This P is reading. So the this I go to ATAS for order flow.
Yeah,
Yep,
so
and
I understand what you're saying. So basically, I will still have trading view just for like charting and stuff, but in terms of the actual execution, you only need to be on ATAS. You're completely correct.
yeah,
So once you have your good positioning, yeah, so price, proof, and precision, they all happen on the ATAS or any other order flow platform
yeah,
that you so choose. But when it comes to reading, I really want you to. The reason I've made these diagrams isn't so I can like it's literally so you can have really concrete frameworks as to how I read price action or how
yeah.
you can read price action. So what we're looking is we're studying the bid and ask, right? Then afterwards we're evaluating. Let me just write that
The
right here.
delta between the two.
Absolutely. And you understand delta is the ask minus the
Yep,
bid, right?
that's
The
right.
third thing, the third thing, the A, so A and E are connected, right? So assess the aggression. Because once you have
So
yeah,
that's right. So who's winning? Who has
absolutely.
control? Is it the sellers or the buyers that have control?
Yeah. So I just want to make one thing clear that the delta is a measure of then the aggression. So you use the delta to assess the aggression. People who are aggressive, that doesn't necessarily mean they're winning. We'll come on to that. I will come on to that today. And the final
Yeah,
thing is detect zeros, which is a super powerful thing. Super powerful thing. So the read framework is something I use inside of my key levels when I'm reading order flow every single time without fail. And what I'll do is
yeah,
I'll stop on the read and I'll actually go and show you today's trade, right? The buy trade, the sell trade was crappy. The buy trade was good. I'll quickly go in fact, you did a good job. I just saw this now. That's crazy.
yeah.
Oh gosh.
I consolidated all of them into, and I'm going to start doing this to kind of go through all of my trades. I even added a trade that I found was invalid. It followed the process, but it didn't have the volume
Yep.
to push it outside of the key level. So I marked it as invalid, and it wound up not playing out.
Awesome. Awesome. Let me quickly show you this. So, in terms of the long trade, right? In terms of the long trade, let's try and understand this execution here. Specifically,
Sure,
this trade here, it was actually a fairly decent trade. Now, the only reason why, in my opinion, it didn't play out. Like, let me ask you this, right? This is gonna be a bit more of an advanced question, where you're gonna peel, where you're gonna use all the knowledge you've had in the past in all the
sure,
systems, right? If you look at today's long trade, it happened around here. Why do
yeah,
you think this long trade, yes, it had some follow through, but it didn't go all the way to the moon? Why do you think this key level here? So if I label the key levels again, so if I label them, this is where it is, right? So if I label it 1, 2, and 3, why do you think the
yeah.
buys from 2 didn't play out? What do you think made it so, you know?
Okay. So I don't think it went from 2 to 1. Um, so there is an auction that happens between buyers and sellers, and they agree on a price.
Yep,
And we saw yesterday or in the Asian session, the buyers and sellers agreed with that double top that they really did not want to go above that level. And so So during the U.S. Open, um, there was not enough.
I'll
There
give
was
you.
not enough.
I'll give you a clue.
Yeah, go ahead.
You're overcomplicating it a little bit.
Sure.
Okay. Think about. Let me show you this. Right. Look at this system here for positioning. Right.
Yeah.
Positioning. Now go to here. Now look at the positioning frame. Look at the four-step positioning process and tell me now.
Okay. Well, so
I'll give you a deeper clue. It's to do with the E. Look at E. Right. Equilibrium. Now go back to here.
is it because it was close to the 50%? I
It's
would
not.
think that it would need to be closer to. So I honestly, other than them agree, the buyers and sellers agreeing that they did not want the market to go higher, um, then I guess I'm not sure. And other than buyers in control, sellers in control, it was in premium.
You just said
So
it there. You just said it there. So whether you
so
whether
premium. Yep.
discount, yeah. So should you be buying in premium or selling?
Oh,
I,
selling, absolutely.
that's all it is. That's all it is. So the fact that I was trying to buy in premium, it means that if we weren't going to get the. I mean, I'm not surprised that that happened. To be fair, we weren't going to get
So,
the.
so a question.
Yeah,
I know that our bias. So I get that part. I think you were. I thought you were asking something different.
it's all right.
So I know that from my perspective, I'm only going to look to sell in premium and only look to buy from discount. I thought you were asking why didn't I think that it went from key level 2 to key level 1,
Oh, okay,
and
okay. Yeah, yeah,
and why? And because if you look before the Asian market, it actually did go from key level 2 to key level 1.
yeah.
But why didn't it do that during this session? I don't know.
Yeah. So obviously, we want to use our system to try and answer that question, right? What you said about buyers and sellers is completely true, right? That sellers, I mean, this level here is just an absolute treat. Like
That's rock solid.
I can't wait to buy from there. Like, I legitimately cannot wait to buy from there. There's going to be a buy trade from there. The reason I don't actively shout about it in the community is because I don't know when it's going to happen, but I know
Yeah,
there's going to be a buy trade from there. I just know it. Like, so
sure.
this is this is basically right. This is when it becomes fun because I'm eyeing up that level. Like I'm literally eyeing up that level. But just to go
Oh
back to
yeah,
just to go back to the thing I was talking about is this, right? This is premium. This is discount, right? It's generally not a wise idea to hold buys when you're in premium. It's just generally not a wise idea. That's all it is.
so so let me kind of talk about this real quick. You don't look at multi time frame biases,
No,
bulls, bears, who's a control on the other time frames.
no,
Instead, you use this as your barometer for whether or not you're going to do go short or long based
absolutely.
on if it's okay. That makes sense to me. I
So
got it.
remember, there's a reason we call it the real time reading blueprint because you're looking to read the price action in the now. There's an
In
American
real
there's an American mentor I have, Carmine Risotto. He's from New York, right? And he said the best time frame. You referred to time frames just now. The best time frame is the now time frame. It's the now
That's
time frame.
right.
It's the now time
That's
frame.
right.
It's not the 1 minute, the 5 minutes. It's the now time frame. So
Right.
the way you read what's happening in the now is to understand the read, the bid and ask, evaluate the delta, assess aggression, detect the risk.
Yeah.
If you can, I've made it into an acronym just so you can remember, but if you can go through the process of understanding what the bid and ask means, then from there looking at the delta profile, which you have on ATAS already, and then
Yeah.
understanding who's aggressive in the level, and then using the trap framework with detecting zeros, or sorry, detecting zeros and using the
Yeah.
trap framework, and then the bolt, that's eventually where we're going. So now that you've done that, let me show you today's execution.
Painfully, because I thought you were asking me something else. But
Ah,
no, that's good. That's good. We got there.
it's cool, man. It's absolutely cool. It's absolutely cool.
Sure.
Let me just put this. So basically, now that you have the level here, so this is a level here. Now, what's important to understand? One quick, let me just remove that. One quick thing you want to understand is this, right? Look at this. Look. So what we're doing is let's go through the entire read framework together. So
Okay.
what we're doing is we are reading the bid and ask. So we understand what does the bid represent?
The bid are sellers and the ask are buyers.
Be a little bit more specific. Okay, yes, you are right, but be more specific.
Okay, so the bid and ask are those are market orders where people are
Yep.
entering into the market at that price.
Yeah, the now. Yeah, in the now, in the real time. Yeah.
Absolutely.
Yep. Okay. And what does the ask mean?
And the ask are market buyers that are buying at that price right now.
Perfect. So that's the bid and ask. Now we move to evaluating the delta. How would you define delta?
Well, the delta would be the bid minus the ask.
Yep, the bid minus the ask. So did you say that correctly? Sometimes even I get the
Yes,
bid.
yeah,
No,
the bid minus the ask.
it is actually the ask minus the bid. However, that doesn't matter. Don't worry about it. That's okay.
Well,
When we
so which one is on the left hand? The
yeah.
you said that the sellers are on the left hand.
So
Is that the ask?
okay, let's take a look at this candle here. You see this candle here where
Yeah,
I'm hovering? This one. You see
I
at the
see it.
bottom. You see. Let's take a look at these two. Do you see where it says 317 for 45?
Yeah.
I'm specifically zooming in on this candle because this is one of the key candles that made me go long. So if you look
Okay.
at this, right, it says 317 for 45. The bid is 317.
Yes. So
The
those are
ask,
sellers.
those are aggressive sellers, which means, as you correctly
Yeah.
pointed out earlier as well, it means that at this, at the time isn't printed, but at this price, let's call it 71.62 or 63, let's just say 63.
Yeah.
What it shows you, what that really means is that there are 317 market orders looking to sell.
Yes.
That's what it means. Now the ask, sorry, now the 45 is just the buyers.
The
Now
aggressive buyers.
the aggressive
Yes.
buyers, yeah. So when you look at evaluating the delta, delta is actually the right number minus the left number. So it's the ask minus the bid.
Yes. Okay. Got it.
However, okay, here's the next thing. Now the E directly leads onto the A because the A stands for assess aggression. Now, when you
Right.
assess aggression, right, what assessing aggression basically means, we want to know who is more aggressive in the real time.
Yes.
Now, if you look at 317 for 45, right, you can see there that the delta is going to be negative because it's 45 minus 317. So that's going to be a negative number.
That's right.
That is the reason the row is highlighted in red.
Yep.
Whereas if you look up here, for example, if you look at my cursor, it says 79 for 152. That's obviously 152 minus 79. That's a positive number.
Right.
Right? So just coming back here for a second, we've understood the bid and ask, aggressive sellers versus aggressive buyers. We've evaluated the delta here, as in 45 minus 317. We've assessed the aggression, which ultimately tells us who is more aggressive, who in the real time is trying to drive price down. So I want you to think about it very literally, like almost like how a 10-year-old will look at it, right? When you see red delta, I want you to think, "Ooh, sellers are really trying to drive price below this level. Sellers are really trying to drive price below this level." Right? And then the final thing we look for is detecting zeros. And so detecting zeros is something you want to detect, right? You want to identify where those zeros are. So if you look here, there is a zero here, 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 here. Like as we started to creep higher, we saw zeros at the bottom.
Yeah.
Do you see that? Now, people often
I
say to
do.
me, "Oh, people will always ask me that, oh, there's zeros at the top, there's zeros at the bottom. Like, which way do I go?" Well, that's a different framework. That's the bolt breakup blueprint framework, right? But
Right.
when you're talking specifically about reading footprint charts, where you need to understand the bid and ask, you then want to evaluate the delta based off what the numbers are telling you, the aggressive sellers versus aggressive buyers. You then take the delta and understand who is being more aggressive inside the level, and then you detect zeros. Typically in the opposite direction to where you're trading. So if you want to trade upwards, if you want to buy, you actually want to see
Yeah.
zeros at the bottom. So it's kind of think of it as like the market is, we call it a finished auction. Now, you may have heard me
Right.
talk about this before, finished auction.
Yeah.
A finished auction, you want to think of it very literally as, okay, in all these places here, the market broke higher on one occasion, two occasion, three occasion, but we had all these zeros, which means that the market kind of is an interesting trading there. It's finished trading there. It's a finished auction. Hence why you have a zero. That's one way to look at it.
question for you.
Yep.
Um, because we can't see limit orders,
No.
is so a finished auction? If there are no more market buyers, then no more sellers could happen. No more selling can happen without a buyer being present. Is that right?
Yeah. So this is the bolt breakup looping. Can I explain that when we look at the bolt?
Of course, I'm just
Yeah.
trying to get understand really from a delta perspective
Yeah.
is really what I'm trying to ask is when I'm detecting zeros, I'm trying to understand what is happening then. I get that there's no buyers there. There are aggressive sellers there. But then what causes the upward movement?
Good
Is
question.
it
Can I?
because
Yep. Can I ask? Can I answer that in the bolt breaker? I'm going to get to that. I'm just.
absolutely,
I just want to.
absolutely.
I just want to go in order because going in order
Yeah,
is
yeah,
very important.
of course.
Once we've got good trade positioning, we then want to read price, or we want to have an understanding of how to use footprint charts to our advantage. That's what the price is, right? That's what we do with price. So what we've essentially done is we've gone around in the reading framework where we've understood the bid and ask, evaluated the delta, assess aggression, detect zeros. Now from here, the next thing we'd go for is the proof. Sorry, yeah, it's the proof. So here we have proof. Proof is we use the trap framework. So the trap allows us to then execute with the bolt. So what I'm going to do now is I'm just going to go straight to the bolt because this is my execution time frame. So if we look at the bolt, right? I think I broke this down step by step. Did I? I'm pretty sure I did. So I made a okay, I definitely made a so yeah, this one. So what we're looking for is this is the bolt breakout blueprint, right? So what we're looking for is the following. So let me just do this. So let me just break down today's trade. And also, the biggest lesson is you don't want to, there we go. So you don't want to kind of ignore today's trade or today's level. And I'll show you why at the end. So basically, what we can see here is this. There we go. So I'm going to answer your question right now. So if you just take a look at this image here versus this image here. Now, hopefully you can see, because you have experience with ATAS now, these two
Yeah.
charts are actually the same.
Yes, they are.
They're very much the same, right? Uh, believe it or not. so, so what we're looking at now is we are trying to understand the entry from the lens of the bolt breakout blueprint. So the reason I talk
Hmm.
about the bolt breakout blueprint is because that is the framework you want to repeat and burn into your brain when you're looking to execute on any time frame. So
Right.
now from here, let's break this down. So what does the bolt stand for? Break. We want to see a break. Now my rule of thumb when it comes to looking for a break is it needs to be at least one candle and it needs to have a body. A body does need to close outside of the zone. I don't feel comfortable using wicks to do it. It needs to be a body. So that's
A
one thing.
full body or a partial body or a full body?
It doesn't. It can be a partial body. Yeah.
Okay.
So now from here,
As
now
long
if you,
as long
yeah,
as it's a full and not a doji or just a wick or
yeah. So for
okay.
example, the one, yeah, so the one which so for me it was this one. If you look at execution at 60, it was let's just say 68. It was actually 71, 67.75. Let's just say 68. Round it up to
Yeah.
68. So at 68, there was a long setup. So what I'm trying to do is because people often say, why did you enter there? What made you enter there? What candle did you trade? I, Everything I do essentially is about the bolt breakout blueprint. Like that's literally the frame, right? That is
Yeah.
literally the entire frame. So I'm going to be breaking down. First of all, I don't just trade off one candle. I look to observe, or in other words, I look to read READ. So I'm going to keep going back to all the systems, right?
Yep.
First I've gone through this. First I've literally done this, right? I've read the bid and ask, I've evaluated the delta, I've assessed the question, I've detected it. I've done that. And so what I've done is I've looked at this area here, here,
Yeah.
here, even here as well, right? These
Yeah.
three. And when you do that, what do you actually see? Like in your own words, explain to me what did you see here?
Well, so I'm seeing where you have the delta is more aggressive sellers. You have zero buyers, and sellers cannot move lower than the key level.
Yeah, perfect. So what's going on is this, right? You're perfect. What you said is very good. Let's quickly do the read framework, right? Inside of this candle here, this one. Let me just move it here. So Specifically to answer your question, when you see 223 for 65, that means that there's a lot more aggressive sellers than buyers. Does that make sense?
Yes.
Now,
Yes.
what you would have noticed if we just zoom out, what you would have noticed is the market couldn't close below the zone here, 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 or here. Now, if you look at
Right.
where I've circled the second circle here, so let's just make that a little bit clearer. These candles here were the main reason I actually went long. These candles here, so one, two, three. So this was like 1020 to
Yeah.
1022. These three candles here, extremely, extremely telling. Now, in your own words, James, what was going on here?
So sellers are aggressive and sellers are failing, and
Yeah,
there's zero aggressive buyers.
yep. So let me ask you a question now. When you see a
Mhm.
ton of aggressive selling over here, look at that. I mean, the aggressive selling here is so much you can't even read the number, which is like a glitch on
You can't
ATA.
even read
I
the
I
number.
think
That's right.
yeah, I think ATA has this. It's like an ATA glitch. When I see that, I'm like, oh my goodness, sellers are so aggressive. They're so aggressive, you can't even read the number, right? But we also
Yeah.
see here 317 for 45. So I'm eyeing this up in real time. People think I read the numbers. People are insane when they say, oh, do you read all the numbers of all the candles? No, of course not. That's why I've got my levels. That's why I position myself. That's why positioning was the first P is positioning, right?
Right.
And then from there, I read price inside the level. And then from there, I understand what the price is doing based on this framework. And then I execute it, the bolt breakup blueprint. But in order for you to actually go to bolt, you need to have a basic understanding of how the absorption works. And this is sort of the
Right.
final few topics we're trying to get together. Now, what's going on here, as you correctly said, right? Let's quickly label this down. So my thought process behind this is very similar to what you said. Here we have an absorption. And so what this means
Yep.
is this: there are a lot of aggressive sellers, and we see that via the red delta. Now,
Yep.
when we see the red delta, what that means is sellers are trying to drive price down. Okay.
Yep.
Now, did they succeed?
No, they didn't.
They didn't, right? So what we refer to this as an absorption, or in other words, sellers were trapped in this region. Okay,
Okay.
that's what you're looking for. That is the only thing you're interested in seeing at a key level. Who is trapped? And also the third
Okay.
circle or this circle here, what you would have noticed is we saw price creeping above with pretty high buying volume. What was going on
Yep.
here? Just before we broke above, what was going on here?
Same thing. We have detect zero. We have a delta sellers, aggressive sellers, and we detect zero, and sellers are failing.
Yeah. So this was actually a premature entry because I did say I want to see a body break, but I saw this and I just
Yep.
executed here straight away, right?
Yeah,
However,
sure.
my break line was actually this one, which is not 100% strict because I did say we want to break with the body. It just depends on how aggressive you are. Some people they will
Okay.
prefer just to go in off a wick, which is fine. Some people want to wait for a body, which is also fine. And I think in this
Okay.
trade, if you waited for a body, you would have been okay. I think.
Yeah.
If you look here, there was the break. A bit premature, but there was the break.
Okay.
Optimal retest, right? That was the retest. Like sometimes the retest, I like the retest to be at least two candles. However, it can be one. Typically, it's going to be two candles. Now look at this,
So
right?
you're just to be clear, you're okay with a wick break
Well,
after after the aggression. You see the order flow moving in that direction. Sell in this case, aggressive sellers failing. You have detect zero of buyers, prices moving up. You're okay with doing your breakout candle on the wick.
yes. Even though I just said it should be with the body, you can do it with
Uh,
the wick if you want.
yeah, well, I see you waffling back and forth, and that's okay. As long as I'm okay with that. I just want to understand that I want to follow whichever rules you have. If it's, I would prefer a body break, I think is what I hear you saying. But if you're confident or a more aggressive stance would be to do a wick.
Yeah. However, one thing I would say about the wick is that I need to see some pretty heavy absorption of sellers first, which is why if you notice I put this in the group. So typically in a market, right, it's a 90-minute trading window. However, what's fascinating is that most of the crucial information, like this image here, I isolated it. I made a Canva and I isolated it because this
Sure.
image here is crucial to today's session.
Yeah.
This image here, right? A trader, like this is all within 15 minutes. This is like 10 minutes, right? I said 10,
Yeah.
15 to 10. This is like 10 minutes, right? That you need to have the patience to wait for the level, and then need to have extreme accuracy and extreme patience in the level to make sure it plays out in your favor. The way that
Yeah.
I build that patience and I guess execution is by building frameworks around it. Trap, read, bolt. These are all the systems I put together into the premium footprint execution process. But if you
Sure.
look here, for example, this was the initial break here. Like I was happy to enter here. You can see that little arrow there. I was happy to enter here because of this, and then this here. This
Yeah.
one candle right there. Look at that. Look at that. In
Yeah.
fact,
That was your optimal retest right there.
what makes it
Which,
optimal?
well, because it happened the very next candle after your breakout candle. And it showed that even at that point on the retest, we have aggressive sellers, we have detect zero buyers, and then your very next candle after your retest does a body break.
Perfect. That's it. That's literally how you do break and retest. Perfect. So between
And
10,
that's
so
what I did. That's what I did today, and
I'm,
it worked. It worked 4 out of 4.
oh man, you beat me. We're gonna go through your trades, so I'm gonna go through them as well. You need to teach me how you do that.
So,
Between,
so I have a so I have a
yeah,
question for you.
yeah,
Your break line, your breakout break line. Are you is it because if we're reading that third candle right now, that would be your entry candle because it broke your break line after an optimal retest. That third candle is do you that candle has not closed yet. So if price action goes above your breakout candle, your break line of your breakout candle,
yep,
are you doing a market order right at the break, or do you
yep.
wait for that third candle to close?
Good question. I often don't wait for it to close. I often just get in. So I,
Okay,
so I, so
that's
I don't wait for it to close. I just feel like I've got my stop here, and then as soon as it gets past here, in fact, I took a screenshot of it actually. I think it was here. Um, where's
then.
this?
Have you ever set a limit order at your breakout?
I don't do limit orders. I just don't do them.
Okay,
So as soon as price was creeping above there at
yeah,
67.75, I was looking to
yeah.
go long. So
You just
it's
pull the trigger and let it ride.
oh
Okay,
you mentioned the right word actually.
yeah, yeah,
That's a coincidence. So break, optimal reaches. Let's quickly go over liquidity absorption, but we have actually gone over it. Um,
yeah.
we have actually gone over it. So the liquidity absorption you're looking at was even here. So
Right.
if you missed the initial entry here, break, retest, you could have gone long here as well. I
That's
was
right.
already in the trade, but you could have look at that. Like that's just isn't that wonderful? What's
That's
fascinating
right.
about what's fascinating about this, yeah? What's super fascinating about this as well is it's like it's a green candle. Like when you see it print in real time, it's like crazy. It's a green candle. Look at that.
Yeah, yeah.
So once you have your level, I think the biggest problem I see is that traders will, when they don't read the price action in the now, they end up trying to
Mhm.
guess whether price is support and resistance. You don't guess whether it's support and resistance. You read, you understand who's trapped, and then you use an execution model to take advantage of that situation. Even here,
Yeah,
finished auction, you see a bunch of zeros here. One, two, three, four,
right.
5. Now you could argue there's zeros at the top, but then again, that's where you use the bolt, right? You want to understand who is being rejected at the key level. If we break above the key level here and here,
Sure.
obviously these sellers were not being rewarded, which means the selling liquidity was absorbed. And that's what makes us pull the trigger, right? That's why it's called liquidity absorption, because
Yep.
the sell liquidity inside the level was absorbed, which means that the sell liquidity was unsuccessful to break below the level. Hence why
Yep.
it broke above the level, and that is why we execute. So I executed here, and then I went in with more size here, this one here,
Yeah.
and then we pull the trigger like you correctly said.
Pull the
So
trigger. Let it ride.
That's that's it.
Yeah.
Now, that was the actual trade. So what I'm going to do now is, before I go over your trades, but they, to be fair, if you're following the bulk breakup blueprint and stuff, then I think they are going to be good. The thing to understand now is this. Oh, that's crazy. Even at this time, it's booked. Okay,
Yuck.
so that's crazy. Okay, so how about,
Right. Non prime hours
yeah, that's
and at equilibrium equals a path of sadness.
yeah, that's that. Yeah, look how horrible. Like at the EQ, like look how horrible it is at the EQ. Imagine sitting through that. That's really bad. Even that, that's just
Yeah,
that
that's
is
heartburn.
that's not good, man. That's
Yeah.
that is like that's like a 2 hour range, which is just insane. However, having
Yeah.
said that, now that FOMC is out the way, Thursday and Friday, you're my red folder news. Is there any red folder news tomorrow? Because I often look only like I only look at it at 9:15 Eastern.
Yeah. Can you hear me?
Yeah, I can hear
Oh,
you. I can hear you.
yep. Sorry. Yeah, we do have red news. Let me
What's
let me do it. So we have GDP, advanced GDP, core PCE price index, and employment cost index.
yeah? Let me see. I think I've got so tomorrow's
And
Thursday.
that's all. That's all Thursday, 6:30 a.m. So it's going to happen before our
Oh,
open.
that's good. I love the news events that happen outside of market hours. I just love those news
Yeah.
events. They're,
Yeah.
they're
Yeah.
just not in our way. I love them. So
Right.
so now from here, there's a couple of things, right? So first of all, let's not forget this because again, what we're doing is we are going round in a circle. So let me just get rid of did you understand this image? I mean, I think this image is very powerful. This one here.
Oh yeah.
Yep. So now from
Yep.
here,
Sorry, I'll wait for my question till when we get to my trades.
that's fine. No
Go ahead.
worries at all. The only thing I was going to finish on is this, right? So hopefully you can see now. One, two, three, and then four. So
Hmm.
if you have an area, this was an area of demand which flipped to supply, right? This is a supply area because we
Yeah.
saw market orders here, we saw market orders here. We also saw market orders here. This is a supply area. Now, even here, obviously, I don't want to make judgments overnight. Anything can happen. So far, this is also a supply area. So what we're
Yeah.
seeing over here, and you can obviously go on the ATAS footprint charts on even the 15-minute time, because I know the 1 minute time frame doesn't let you go back, but on the 5 minute or the 50 minute, you can definitely see what's going on here. What you will
Yeah.
see is you will see absorption, 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 right? You will see the absorption, right? Now, it is your job to understand that, and it's your job to understand, okay, how do I, take advantage of this? Now, the reason this is important it's because hopefully you can see now with these four levels, they aren't levels I've like randomly made up. They're levels that have
Right.
that have gone through the four P's, right? They are levels that have gone through the four P's. So what I mean by
Yes.
the four P's is what we've done is we've used the four-step positioning process. We've then read
Yep.
price in the level. We've understood who's trapped, and then we've taken a precision entry. Now, the beauty with taking a precision entry is that the market has shown you that it is a good level. We see liquidity absorption, and then we use that. Guess what we use that up for? We use that as our next key level for the next few days or the next few weeks. So to answer one of
Right.
your previous questions about where did that level come from in November, this is how I got it using this circle
Yeah.
here. So it is a circle. It is a process, and we just keep going round and round every day. It doesn't matter if FOMC is there. It doesn't matter if news events are there, we just be cautious. We be cautious with our trade management. But from an execution process, this is the only thing we're doing. We're getting good trade positioning. We're reading price. We're understanding proof, and then we're executing with precision. And then we're using that same key level to go back to positioning. That's all we're doing.
That's it.
Now,
No,
let
I like it.
yeah, don't worry, man. I'm gonna try and make more frameworks and stuff to follow. Let me go through the stuff you sent me because I know you took some absolute bangers. I need to go and you took a short at that level, didn't you? I think I saw it. This is really good. Okay, let's do it.
Yeah.
So what did you want to? Because I actually reviewed the market after I saw this trade. I did see it.
Yeah. So really, the first question I have is, so this was,
That's a good
yeah,
trade, by the way.
yeah. So this is like the second or third. So I'm showing absorption in the key level. That's my triangles. I'm showing the first arrow down is my break. But I was using in your diagram, the bolt diagram that you did. you did it from the body and not the wick. Uh, it's neither here nor there. As long as I understand that I can do either one, then
Yeah.
I'll pick.
You know what?
And
Yeah.
really, and if it's closer to the key level, then that's 4 ticks sooner. As long as it breaks that, that's 4 ticks of profit more by using the body and not the wick. So
Yeah.
that's fine. Um,
Your entry here was pretty good. I mean, it was. I mean, I personally would have had it. I mean, James, we are arguing over like 0 point.
yeah, I know.
Yeah, it doesn't
Well,
matter.
and that's well, and so on that trade, I used the close of the candle
That's
to
fine.
make sure
Yeah,
that it closed after. And so that's why I asked the question earlier. I would, as long as I'm hitting that line, the break line, then I'll just enter right then and not have to wait.
yeah,
And by using what I noticed also is these key levels are only like 20 ticks away in width,
yeah, yeah.
and
That
so
yeah,
the stop loss and the risk is very reasonable.
yeah. Of course. Yeah.
Yeah,
I wanted to
and so
go
that's
through. Yeah,
yeah. Go ahead.
these are solid. I mean, this one for some reason resonates with me more. No comment, but this is a good trade. Yeah, this is really good. Hope. Was this at I know the time's not the. Oh, it is 8:39. Yeah, this is your 2 hours behind Eastern. So yeah, yeah, this was very good. So around sort of 10 your time, it would be like 8:15 to 8:30. This time, this was very good. Look at that.
And so the reason I held off, so the first green arrow, that was the break candle.
This was a
The
good
second
trade.
one
This was a
the
good
second
trade.
one showed, oh, absolutely. But the second one, the optimal retest, that was good absorption there. But the reason I didn't enter on the next two, 1, 2, 3, 4, 5 candles is I saw wicks above and absorption above and zeros above, which I'm like, okay, that doesn't give me acceptance a lot of confidence in accepting. And so I waited for it, and sure enough, it went back in and retested the level, and then it just took off.
Fantastic. Fantastic. Fantastic.
Yeah, yeah,
This is solid, right? Because what you've essentially done, I mean, my entry was here. However, there was the break candle, like you've correctly identified. You could have
yeah,
entered. I mean, you could have even, if you wanted to be very what's the word, conservative. Now this is a personality thing. Some people, if they're more conservative, they'll wait for the whole break phase to be end. I personally wouldn't do that. What you've done here, the reason this trade was so good is because you actually took, I mean, this was your entry, so you actually entered here, which means that you allowed
yeah,
the one count. This was very good. Stops below here, this is perfect. I mean, I
yeah.
got nothing else. They're very good, very good.
Awesome.
We didn't get the follow through we wanted, and that's because don't forget we were actually buying in premium. We were literally in premium. So that's why
Absolutely.
we were in premium. So that's why the
Well, but
position.
that's just as important. Is I set
Yeah,
my target for the bottom of the next key level, but then when I see absorption on both top and bottom, that shows me indecision. That tells me that
yep,
they've kind of lost interest,
yep,
and nobody really wants control. And at that point, I exited once I saw that.
yep. So I mean, I was aiming for this would have been an absolute banger 320. Can you
Yeah,
imagine it? This would
yeah,
have been
right.
like this would have been phew, that would have been
Yeah,
next level, man. I would have got out
yeah,
here. Now the question is why I got a question in the community. Why did I get out there? The reason I would get out there is because of we already went through this, but the reason I get out here is because I know for a fact there are huge sellers here, huge sellers here. So
yeah,
I got no business holding this trade thinking, oh, we might be able to. No, no, no. You get out here, right? That's
yeah.
very important to understand. Your
Well, I look for order flow now. Order flow is going to tell me. And so here's another thing: is I'm actually okay if price loses momentum. One of my trades, I got out when price lost. The order flow showed that it was losing momentum up. It may have done like a small retrace and then continued forward. I'm actually okay exiting with 20 ticks because there's going to be another setup in 30 minutes or an hour, and I've gotten my money. I'm out of the market. I'm heartburn free, and just waiting for the next setup.
yeah,
Okay, so this was the first one that I took, and so here's my question: the first arrow down, that is the 7:30. Yep, that's the 7:30 candle. Are you okay? allowing your first breakout to be within the first 15 minutes?
Yeah, I'm fine with that. The only rule I have is I don't trade within the first 15 minutes unless the setup is
Okay.
really, really clean. But I found if you just wait, so the first 15 minutes was like from here to around, I think here or something. It must,
Yeah.
yeah, 7:45, right? So 7:30 to 7:45. This first 15 minutes here, critical, absolutely critical. Do not
Yeah.
try and don't try and there's no point forcing a trade before 7:45 unless the setup is super clean and it's at a key level and it's showing you the bolt breaker and you're ready to take it. There are some days it does do that. There are some days, but I've noticed recently that that is not happening at all. It's literally a
Okay.
waiting game from set. The first 15 minutes is gold mine. Like if you can understand the first 15 minutes, it
Mm,
shows you market sentiment. Right now, this trade here wasn't even that bad. Like
yeah.
optimal candle retest. I personally have another rule. The reason I didn't take this is I have two. I have a rule which you probably see sometimes I break them, but like, I have a rule where like my optimal retest has to be at least two candles. So I personally would have stayed. I personally stayed out this one. However, the setup. Actually, no, I did get in and took a dumb trade. However, I would have maybe not taken this one because I needed to see at least two candles.
I'm sorry, you broke up. You needed to see at least what?
I need to see. You see, the optimal retest is only one candle. I like to see more than one candle for an optimal retest. That's just me.
Okay.
However,
Okay.
the actual trade from a logistics standpoint wasn't bad. We had this huge break, 15 minutes. We came back in here. What we see is we saw the rejection of aggressive buyers. So passive sellers were in control. Do you know what I mean by passive sellers?
Passive sellers. Yeah. Yeah. Limit orders.
Yeah, perfect. Yeah, so they're responsible for driving price down. Oh,
Yeah.
this looks very good.
Yeah.
What time was
No,
this?
it the yeah the last bolt chart that you sent out that really clicked for me. That in combination between I was getting I had built onto your overlay. I needed more confirmation. I needed add-ins. And all of that is just losing me money and it's losing time and headspace. So
Yeah,
I have deleted all of that stuff and
perfect.
just purely I mean, the proof is in the pudding. You were outperforming me every day, and
Yeah,
which is great. That's
it's
what I
not.
need
It's
in a
it's
company.
not. It's not about outperforming, man, because we're all doing the same thing at the end of the day. So we all need to like you can outperform me if you increase size and just because one thing with you, right, is that you live 7 hours behind me, right? So you're actually behind New York time as well. So you can actually afford to sit. I don't recommend it, but you can afford to sit and actually scout these levels. Whereas with me, because
Yeah,
it's in the afternoon and going into evening, it's a bit less practical for us in the UK. But
right.
but but you're in Mountain Standard Time, so it's a pretty decent time, I think, because I'm not a morning person, right? So I don't know how people do on Pacific time.
Yeah, right. Well, so what I did is I took, and it's a good thing. I'm following yours. And I need you to outperform me. I need, and you've it proves me that I don't need all of my intelligence and data analysis and
No, you don't.
confirmation, all that bullshit. Instead, I just need to follow a process that. Sorry, I just need to follow a process that you put out very cleanly. And today, day one, 4 out of 4. Can't argue with that, man.
Let's take a look at this. This is very good. So yeah, I personally don't like this. I mean, this is where the intuitive side comes into it. You're obviously building your intuition, and order flow does have an intuition side, which it's very difficult to teach via like these calls. You just have to like you actually chart time is the best thing with order flow. Not even like these sessions at this point. It's literally chart time, back testing, getting experience every single day, 5 days a week. This here is very
Yeah.
good. What you've identified here, the trade did not break out invalid volume. This here, so the way I would do this is I would see. I mean, where was your bolt line here? Where was your break line here?
Yeah, the brake line was the red arrow, but it didn't have hardly any volume behind it. So that told me that it yes, it broke,
Oh,
but
here, like here.
yeah.
Okay,
Yeah,
okay,
because the market came up, it touched, it went into the key level, and then it went back down. Well, that's my first break line then, back down, but it had very little volume behind it. It had -1.
yeah,
And so that in itself made it invalid because your chart said it has to break out with adequate volume in order for it to be valid.
yeah, yeah, yeah. And also another thing about time quickly. This is 9 in your time. I mean, and you
Yeah.
for you market closes at 9. What the after 9 a.m. Mountain Standard Time, the volume will dry out. The
Well,
market does slow down after 11 a.m. Eastern or 9 a.m. Mountain your time.
I have found that it's pretty hot until 11 o'clock my time.
Okay.
Because what this one did is it broke out very weakly. It kind of went sideways. It then went back into the key level, and then it just dropped like a rock.
Yeah.
But at that point, I'm like, I'm not gonna predict. It just needs to tell me in real time
Yeah.
what it's gonna do.
100%. Also, don't forget you were also in premium, so you shorts were favored anyway.
Yeah.
I I personally think the long trade was really good.
Yep.
The shorts were there. I just think I couldn't catch them, man. It's just long. And also, so for me, this would have been, yeah. I'm typically done by that this time, but yeah,
Yeah.
this was very good. I mean, this is clean. What I want you to do now is I'm going to get you to do this for homework, and this homework's going to be more of a practice than anything else. What I want you to do,
Okay.
this is crazy. Look at that. What I was going to say is this. What I want you to do is I want you to, using ATAS, I want you to, I want to give you some homework. I want you to explain why this is a key level. And what I want you to reference is this. I want you to reference the four-step process because you at the start of the call we went through the four-step process. I want you to reference everything from the four-step process. Is it in premium? Is it in discount? How do you get the level? How do you get the price imbalance? Why is it valid? I want you to reference it in terms of the four-step process. I then also want you to use the trap framework, right, to basically explain why there are limit orders here, right?
Okay.
And the final piece of homework, this is going to be the most challenging one, is I want you to do this. Right? I've given this homework to a few students. I don't think I've given it to you yet, but it doubles the amount of work you can do, which is great. So what you can do is I want you to find the mirror trade on NASDAQ. I want you to do that as well.
Okay.
I want you to be able to explain to me because on Nasdaq and the S&P, as you know, move very similar. I want you to mirror this price action analysis and find me the same level on the Nasdaq, so you get double the practice. And for
Okay.
your fourth homework, I want you to do this. I want you to, on, let's say, ES and NQ, find me the bullish setup on, let's just, what was today's date? 29th, right? 29th April. Let's keep the times between 9:30 and 11 Eastern. All right.
Okay.
These are the four homeworks I want you to do for your next session. And if
So why are we looking for bullish setups in premium?
yeah, good question. So the reason I want you to do that, it's more of a scalp trade, but I want you to find using this key level here. When I say find me the bullish setup, I want you to explain to me using the bolt breakup blueprint. I need to make that maybe clearer. I need to make that so
Okay.
with the bolt,
Okay.
right?
So these would be scalps.
Yeah, these are scalps, right? It's a scalp
Nice.
bullish trade because we're in premium and you don't want to be holding too many trades in premium, basically.
Yeah. Brilliant.
Awesome. And on that note, what I'm going to do is I'm going to stop the recording. That was a pretty